Talking about Australia, we're a long way from anywhere when you're in the Northern Hemisphere, but Australia really has been away from much of the turmoil that's taken place in international financial markets over the last year. The main reason for that has been that Australia's reliance on its commodity base has allowed it to sail through much of the problem. But the other thing which is very, very important is that the Australian economy is in remarkably robust shape after having 11 years of expansion, and during that period we've had some very important things happen. But the most important is the fact that we no longer have any sovereign debt, that is ZIP. In fact, it's a positive. We've had over 10 years of budget surpluses at the federal level. As a result of that, we now have a surplus on our total capital account on behalf of the federal government. So that puts us in a very, very different position to almost anything in Europe, the UK, the US, Japan, and many other parts of the world. So Australia's been in a quite good position. It also means that there's a buffer for the federal government to increase spending and carrying out other fiscal programs to underpin the economy. The other really important thing is our banking system. Our banking system has been remarkably robust. Sure that the stocks are probably down 50% from their highs, but they're nowhere near the 90% declines that we've seen in many of the bank stocks around the world. Australian banks do not have very much exposure to the derivative markets, and very importantly, the property markets in Australia have been reasonably quiet, which is unusual at this stage of a 10 or 11 year expansion. The Sydney property market peaked in 2002, and since then it's been fairly steady, so we're not going to see the problems that we've seen perhaps in the UK or in the United States in respect of property values and that impacting on the banks. Now, the outlook on a world scene is difficult to come to grips with in terms of where we will be in 2009. Because we've got such a big reliance on China, we're probably in far better position than perhaps if we were in North America. We can expect that China will continue its growth. Slow growth is probably recession by anyone else's standards, but nevertheless it will be growth in the 7 to 8% level, which will be good for Australia. Commodity demand will still be firm in terms of volumes. Prices have come off, but the important areas in iron ore and coal still remain reasonably robust. Now, as far as the economic outlook is concerned, 2009 will be difficult. Australia will have a growth in 2008 of about 2.5%, and it should decline to about 1.7% in 2009, according to the latest OECD figures that have just been released this week. And then we should get a recovery to about 2.9% in 2010. And our interest rate environment is coming down. The budget surpluses that the Australian government has had will also allow the Reserve Bank to ease on monetary conditions and bring interest rates down even more. The rise that we've seen over the last couple of years in Australia was sort of counter trend to what's going on in the United States, and now we're seeing the interest rates coming off and probably another 0.5 to 1% cut before the end of the year. So the Australian economy looks quite reasonable for 2009, and it should be able to withstand reasonable shocks in 2009 and beyond.